What is happening, crypto fam? Buckle up because the market is moving at lightning speed and you need to know what's going down. We've got seismic shifts, massive movements, and strategic plays that could redefine the game. Get ready for the unmissable updates that will keep you ahead of the curve. First up, are we seeing a major shift in power dynamics? Some serious capital is being amassed, and whispers suggest it could be positioning for a move that might just leave the king itself in the dust. We're diving deep into the accumulation trends that have analysts buzzing and asking, is this the moment we've been waiting for? Then, hold on tight as we dissect a dual rally that's got everyone talking. Bitcoin is charging forward, hitting incredible new highs, but it's not alone. The ultimate store of value, gold, is also smashing records. Are these two powerhouses dancing to the same tune, or is this a fleeting moment? We'll break down the signals, the risks, and what it all means for your portfolio. Next, a critical question for the boardroom. When digital assets become a corporate asset, what do leaders absolutely need to know? We're exploring the intricate world of putting Bitcoin on the balance sheet, dissecting the strategies, the risks, and the essential considerations for public companies navigating this new frontier. Finally, the charts are telling a story of consolidation and strategic plays, even as broader economic indicators suggest potential shifts. We'll unpack the latest price action, the analyst insights, and the underlying sentiment that's shaping the market's next move. You don't want to miss this. Hit that subscribe button, ring the notification bell, and let's get into it. Whale watch. Is Ethereum accumulation signaling a Bitcoin outperformance? Are we on the verge of a significant power shift in the digital asset landscape? There are strong indications that substantial capital is being accumulated, sparking intense speculation about a potential move that could challenge Bitcoin's long-standing dominance. This isn't just background noise. It's a strategic play unfolding in real time, driven by major players, often referred to as whales, whose actions can dramatically influence market direction. The recent data points to a notable increase in Ethereum accumulation by these large holders. This trend is particularly intriguing when contrasted with Bitcoin's recent performance. While Bitcoin has historically been the undisputed leader, the current accumulation patterns in Ethereum suggest a growing conviction among major investors about its future potential. Analysts are closely monitoring these flows, seeking to understand the underlying motivations and predict the potential impact. Is this a sign of diversification by whales, or are they hedging their bets on Ethereum's technological advancements and ecosystem growth, believing it could offer superior returns in the near future? Several factors could be contributing to this whale-driven accumulation. The ongoing development and upgrades within the Ethereum network, such as the successful implementation of the merge and further enhancements aimed at improving scalability and reducing transaction fees, are making it a more attractive platform for both developers and investors. Furthermore, the burgeoning decentralized finance, DeFi, and non-fungible token, NFT sectors, largely built on Ethereum, continue to expand, creating new use cases and driving demand for ETH. The increasing institutional interest in digital assets, coupled with a growing understanding of Ethereum's utility beyond just a speculative asset, might also be playing a role. Whales, with their significant capital, are often among the first to capitalize on these evolving narratives and technological shifts. However, the question remains, can this accumulation translate into an outright outperformance of Bitcoin? Historically, Bitcoin has served as the benchmark, the primary store of value, and the most liquid digital asset. Its network effects and established market position are formidable. Yet, Ethereum's unique value proposition, including its smart contract capabilities that power a vast array of applications, presents a compelling case for its growth. The current accumulation phase could be a prelude to a period where Ethereum not only catches up, but potentially surpasses Bitcoin in certain performance metrics. The market is watching with bated breath as these large players make their moves, potentially setting the stage for a new chapter in the cryptocurrency saga. The community is abuzz with discussions about whether this is a sustainable trend or a temporary anomaly. Analysts are divided, with some predicting a continued BTC dominance and others seeing Ethereum poised for a significant surge. But before we dive deeper into the future of these digital giants, remember that the market is a dynamic stage. Stay tuned, because we're about to witness a spectacular rally that has gold reaching for the stars while Bitcoin charges forward. Bitcoin bulls charge at $112K while gold sets fresh records, but can the rally last? Get ready, because the financial markets are witnessing a spectacular convergence of powerhouses. Bitcoin has surged past the $111,000 mark, flirting with $112,000 in a move that's electrifying the crypto space. But this isn't a solo act. The ultimate safe haven, gold, has simultaneously smashed through to new all-time highs, soaring above $3,500 an ounce. These two seemingly disparate assets are suddenly moving in tandem, performing a complex macro waltz that has investors on the edge of their seats. The question on everyone's mind: is this a sustainable bullish duet or a fleeting performance? At the opening bell on Wall Street, Bitcoin demonstrated its signature volatility, jumping nearly 2% to hit $111,775 on Bitstamp. This surge wasn't isolated. It mirrored gold's impressive breakout, which was largely fueled by last Friday's crucial U.S. macroeconomic data. Together, Bitcoin BTC and gold XAU delivered a punishing blow to short sellers, with data from CoinGlass revealing approximately $60 million in crypto liquidations within a mere 4-hour window. This sharp upward movement suggests a renewed appetite for riskier assets, or perhaps a flight to perceived value in a turbulent economic climate. However, beneath the surface of this triumphant rally, bearish signals are casting a shadow. Renowned analyst Rect Capital described the current juncture as critical, pointing to heavy bearish candles on the charts and cautioning that Bitcoin could potentially slip out of its established uptrend channel. A more pessimistic outlook suggests that the $112,000 level has now transformed into a significant resistance point, making a retest of the $100,000 level an increasingly likely scenario in the coming days. The harshest take: if Bitcoin falters below $100,000, the current bull market could be in serious jeopardy, a stark reality hanging over every price candle. Adding to the caution is Bitcoin's historical seasonality. September has notoriously been a challenging month for BTC, with an average loss of 3.5% since 2013, and the third week often proving to be a red zone. If history is any guide, this current rally could be a sophisticated bull trap, masked by the glittering performance of gold. Despite these concerns, not all indicators point to doom. Data from Glassnode reveals a tight clustering of Bitcoin's cost basis around current price levels, signaling strong conviction in the spot market, especially when compared to Ethereum's weaker flows. This density typically provides robust support, contrasting with the volatility often seen in futures-driven moves. Exchange flows also add layers of intrigue. Coinbase experienced net flow spikes in late August, reaching lows not seen since early 2023, while Binance saw significant net flow highs in late July and August, periods historically linked to reaccumulation phases. This suggests that smart money might be quietly consolidating positions in anticipation of further upside. Technically, the battle lines are drawn. Bitcoin needs to decisively close above $113,650 to confirm a bullish breakout and decisively break the descending trendline. Such a move would open the path to targets at $116,300, $117,500, and potentially even $119,500. Conversely, failure to break through could see prices plummeting towards the $105,000 order block. The crucial twist in this narrative is that Bitcoin isn't leading this rally. Gold is. Gold's record-breaking performance is a clear signal of investor concerns about fiat currency debasement and broader macroeconomic uncertainties. If gold continues its upward trajectory, Bitcoin could ride this wave of positive sentiment. However, if gold stalls, Bitcoin might find itself in a precarious position, potentially facing a sharp correction. So, is this a display of Bitcoin's inherent strength, or is it merely acting as gold with more beta? The answer likely lies in the next few trading sessions and gold's ability to maintain its position above $3,500. Audience impact. Traders are closely watching the $112K level for Bitcoin and $3,500 for gold, with analysts debating whether this is a genuine breakout or a temporary surge before a potential correction. But the story doesn't end with these titans. There's a crucial conversation happening in the highest corporate circles. Now, let's shift gears and explore how major corporations are navigating the complex world of digital assets on their balance sheets. Bitcoin on the balance sheet, what public company boards need to know. In an era where digital assets are capturing global attention, a pivotal question is emerging for public company boards. Should they consider holding Bitcoin and other cryptocurrencies on their balance sheets? This isn't a fringe topic anymore. With a growing number of companies dedicated exclusively to holding digital assets, traditional operating businesses are increasingly weighing the strategic implications. While the allure of innovation, potential returns, and enhanced market visibility is undeniable, the decision to integrate crypto assets comes with a unique set of risks and complexities, especially for companies operating outside the crypto sector. This deep dive explores the critical considerations for boards of directors in both the US and the UK, offering essential guidance for navigating this evolving financial landscape. The rationale for holding cryptocurrency varies significantly among companies. Some view it as a strategic hedge against inflation or currency devaluation, aiming to protect purchasing power in an uncertain economic environment. Others see it as a way to signal technological leadership, demonstrating a forward-thinking approach and appealing to a younger, digitally native consumer base. The potential for significant financial returns is, of course, another major draw. However, boards must move beyond these initial attractions and engage in rigorous due diligence. Key questions include whether holding crypto aligns with the company's core business strategy, its tolerance for risk, and its overall financial objectives. A clear, well-documented rationale is paramount, ideally integrated into an updated treasury policy or investment plan. Central to this decision-making process is the establishment of robust governance, custody, and control mechanisms. Cryptocurrencies are notoriously volatile and susceptible to heightened operational risks, including theft, hacking, and loss of access to private keys. Boards must ensure that internal controls are not only adequate, but specifically tailored to address these unique challenges. This involves implementing strict segregation of duties, securing assets through reliable custody arrangements, whether self-custody or through a vetted third-party provider, and ensuring regular, transparent reporting to the board. The decision between on-chain and off-chain holdings, or the use of cold wallets versus hot wallets, requires careful balancing of accessibility against security. Given the transparency of blockchain technology, company activities involving crypto can become public, necessitating proactive planning for potential scrutiny from investors, regulators, and the media. Furthermore, companies must anticipate evolving disclosure requirements and prepare for comprehensive stakeholder engagement. This includes understanding how crypto holdings will be reported in financial statements and public filings, particularly concerning fair value measurement, risk factor disclosures, and the impact on earnings. Boards need to be ready to address detailed inquiries from investors, analysts, and the press regarding the strategic rationale, associated risks, and even the environmental impact of their crypto holdings. In the US, directors must uphold their fiduciary duties, ensuring decisions are well documented and aligned with the company's risk profile, while complying with SEC expectations for transparent disclosure. In the UK, directors must adhere to duties under the Companies Act 2006, promoting the company's success and exercising sound judgment, especially given crypto's speculative nature. Both jurisdictions require careful consideration of accounting treatments, tax implications, and potential reputational risks, particularly concerning ESG considerations. Looking ahead, boards must remain vigilant regarding unfolding regulations in both the US and UK, monitor rapid market and technological shifts within the crypto ecosystem, and proactively engage with evolving stakeholder expectations. The decision to place Bitcoin on the balance sheet is complex, and for many, the risks may outweigh the benefits unless a clear strategic imperative and robust governance framework are in place. Audience impact. Corporate finance leaders and board members are actively debating the risks and rewards of crypto treasury management, with a focus on regulatory clarity and robust security protocols. While boards grapple with these strategic decisions, the broader market is reacting to economic shifts that are sending ripples through digital assets. Now, let's analyze how these economic indicators are influencing Bitcoin's price action and what analysts are saying about its short-term prospects. Bitcoin retreats despite rate cut odds spike. Ethereum, XRP, Dogecoin Also Slip. Analyst explains why ETH's boring phase is expected to drag on. In a surprising turn of events, leading cryptocurrencies have diverged from the stock market's positive trajectory, with Bitcoin experiencing a notable retreat despite a significant spike in the odds of an impending interest rate cut. This divergence raises questions about the underlying market drivers and investor sentiment. Bitcoin dipped to an intraday low of $109,347.23 early Thursday before staging a partial recovery to the mid-$111,000, though its trading volume saw an 11% increase over the preceding 24 hours. The broader crypto market followed suit, with Ethereum falling below $4,300 and failing to mount a substantial recovery, while XRP and Dogecoin also registered declines. The cooling institutional demand played a significant role in this market movement. Data from Soso Value indicates that Bitcoin and Ethereum-linked exchange-traded funds, ETFs, experienced substantial outflows, totaling $362.31 million and $316.21 million, respectively. This outflow suggests a potential pullback from institutional investors, who have been key drivers of recent market gains. Consequently, over $290 million was liquidated across the cryptocurrency market in the last 24 hours, with long-position traders bearing the brunt of the losses, amounting to $223 million. Bitcoin's open interest also saw a slight drop of 1.25% in the same period. Meanwhile, the Puell multiple indicator, which gauges Bitcoin mining pressure, remained neutral, suggesting the market is neither significantly overvalued nor undervalued at present. The overall market sentiment, as measured by the Crypto Fear and Greed Index, held steady at neutral. This crypto market pullback occurred even as U.S. stocks rallied strongly on Thursday. The Dow Jones Industrial Average climbed 350.06 points, the S&P 500 rose 0.83%, and the Nasdaq Composite closed up 0.98%. This performance was largely influenced by the release of disappointing private payrolls data for August, which showed only 54,000 new jobs created, down from July's 106,000 and below economists' expectations of 65,000. This weak labor market data significantly boosted the odds of a September rate cut, with the CME FedWatch tool showing an increase from 96.6% to 99.3%. Despite the positive macroeconomic signal for potential rate cuts, which typically benefits risk assets, Bitcoin faced selling pressure. Widely followed cryptocurrency analyst BitBull pointed to Bitcoin's rejection from a critical resistance level, stating, "Until the $114,000 level is reclaimed on the daily timeframe, every BTC move will just be a bull trap." The analyst further warned that the longer it takes to reclaim this level, the higher the probability of a significant correction before any potential reversal. This sentiment suggests that the market may be wary of further upside without a clear break above key technical resistance. Adding to the market's mixed signals, another prominent commentator, Wolf, described Ethereum as being in a boring phase, a sentiment expected to persist for several more weeks. The analyst's base case scenario involves a short-term sweep of recent highs before the upcoming FOMC meeting, followed by a potential sell-the-news event and subsequent dip to lower levels. This outlook indicates a period of consolidation for Ethereum, potentially dampening enthusiasm for altcoins in the short term. Audience impact. Investors are reacting to the divergence between crypto and traditional markets, with analysts cautioning about potential bull traps for Bitcoin and an extended boring phase for Ethereum. It's clear that today's market is a complex interplay of technicals, sentiment, and macroeconomic forces. But what were the biggest stories that shaped this dynamic landscape? Let's do a quick recap. And that's a wrap for today's Market Pulse. We saw Ethereum whales making big moves, potentially setting up a challenge to Bitcoin's dominance. Then, Bitcoin and gold put on a dazzling dual rally, but the key question is, can it last? We also explored the critical considerations for public companies looking to add Bitcoin to their balance sheets, a complex strategic decision. Finally, Bitcoin pulled back despite rate cut hopes, while Ethereum faces an extended lull, according to analysts. Don't miss out on any of these critical updates. Make sure you're subscribed, hit that notification bell, and join the conversation in the comments below. Follow us on all our social channels for even more market insights. We'll see you next time on Bitcoin Bulletin.